Welcome to a new episode of the brand called You. Today I have a very interesting guest who's who maybe I can say a real estate baron. Anshul Jain, welcome to the show.
Thank you. Pleasure to be here.
Anshul is a master's in finance from Delhi University. He's an MBA from IMD Switzerland. He's a fellow of the Royal Institution of Chartered Surveyors. And currently, he's the country head and managing director of Cushman and Wakefield, India. Anshul, you spent 2 decades in real estate. Tell us a little bit about your early career, some of your learnings, and some of your challenges.
So the way I got into real estate itself is a funny story. It was a luck by chance, I would say, right? So I was after I finished my master's in finance, I was working in what was then called the merchant banking industry, and within that industry, I was interested to sell consumer goods at the time for the company that I was working in, consumer product, i.e., fixed deposits, as the firm was raising money. So I was actually doing door-to-door sales, and I bumped into someone at a competitor firm at the time, and I was really knocked the door down to sell a fixed deposit product. And before I knew, he was selling a job to me in the real estate services sector. And this sector was very new in India. I mean, almost no one knew about it. And before that time, it was only real estate was really a mom and pop broking game, right? But you know what? I was tired of running around Delhi in the heat selling fixed deposits, and this seemed to be a nice environment. And that was literally what did the trick for me. And I said, I'm just going to take this job. It seemed interesting. It was about professionalizing the real estate sector. But you know what? My drivers were, okay, it's interesting, and it gives me an interesting, a clean environment to work in. But little did I know what this industry would do to the sector, this professionalization of the sector, and to careers. And it's just been a phenomenal journey over 25 years.
Amazing. So before we get into some of your work, tell us a little bit about the kind of work Cushman and Wakefield does in India.
So Cushman Wakefield is an end-to-end real estate service provider. So in a value chain of work, you've got two major set of clients. So one's occupier set, people, companies who occupy a property, and the other is owner, investor, developer set, people who build, own assets effectively. What we do is give services to any of their requirements. So if I talk about, for example, the owner set, will help raise money for them through our real estate investment banking teams. We will help them source land, either through outright joint ventures, joint developments. We'll help them construct the property. So we've got project managers, engineers who help them construct the property. We'll help them sell or lease the property, and then we'll help them manage the property to international standards. So let's say that's for the owner set. For the occupier set, we'll help them source the property. We'll help them fit out, do the internal fit outs. We'll help them manage. Wrapped around this whole thing is our consulting services to do whether it's highest and best land use, feasibility studies, market reports, master plans for corporates, workplace strategies for corporates, what kind of workspaces is required depending on the businesses. So we do all that studies, and of course statutory valuations. So that, in a nutshell,
Is the entire
gamut of
And you're not developers yourself.
No, we do not lend our balance sheet to anything. So we are not developers, we are pure service providers.
And again, just for our listeners and understanding, Cushman Wakefield, you say India, so this is obviously a global company.
Correct.
So
So much like it's the easiest thing for me to draw parallels on is the big four of the accounting firms effectively. So like there's big four in that realm. In the real estate realm, there is so-called big three at the moment, or perhaps big four globally. And one of that is us. So Cushman Wakefield's position globally is one of the top three firms. We are a young listed firm. We got listed on New York Stock Exchange August of last year. We went through a series of M&A before that, where a number of companies in US, Europe, and Asia kind of came together to form what today is Cushman Wakefield.
interesting. And you just mentioned that when you came into the business, it was fairly disorganized. In the last 2 decades, with the entry of firms like yours, what has changed in the way this business is being done?
I think the commercial office side has changed significantly, both in how the offices are delivered, how the offices are maintained,
Yeah.
and how transactions are done effectively. So today, I think in this sector, at least 70 to 80% of the transactions are mediated by an international provider or a professional player
Mhm.
in this sector. The mediation is, I'd say, advisory business really, because it's no longer a broking business where I show you, Mr. X, the space, and then I sit back, I help a little bit in negotiation, and the deal's done. That's traditional broking. Today, it's really end to end, right? When corporate is looking at a space, they're worried about employee mobility. They're worried about how they're going to attract people into the new office and what effect will that have. They are worried about the design of the office and how the design is going to respond to the business base, whether a design can be accommodated in the shape of the flow plates there could be. And then, of course, there's whole contractual and legal angle, protecting the company's risk management. So it's a whole bouquet of services that gets offered. So that's how I suppose the real estate broking industry has been sort of professionalized. If I talk about the industry itself, the quality of buildings that you were saying, in the early 2000s, the first generation commercial buildings, retail buildings, as well as condominiums, right? But as the demands for the clients in the corporate sector has matured, that's on one side, and on the supply side, the ownership has matured with a lot more global institutions now owning office buildings here in India. So both those factors have combined, have come together to create a pretty high quality office environment. So every new building that's coming up is actually bigger and better, and from an environment perspective than the previous one. That's on the on the office side. If you look at the residential side, it's pretty much same dynamics as Indians are traveling around the world. They're experiencing better quality residential as Indians are getting wealthier in India. The demand is for better quality condominiums, right? And against the same story, that's forcing the market to innovate, change quality design of the condominiums that are being delivered today versus what were being delivered first generation 20 years ago is very different. And the same story really continues. I mean, in retail, you've seen that story, first generation retail versus what's today. It's all driven by how consumers are thinking. And the global institutions which are coming in, and the global institutions also forcing then the thought process of large Indian players to change.
Correct.
So it's an interesting dynamic which has developed in the market, which is changing the entire market at a very fast pace.
So if I'm say a big developer, and I say I'm going to put 1 million square feet of commercial or residential, would I come to you and say, help me conceptualize it, and then later on help me sell it?
Yes.
Would that how the relationship would evolve?
Yes, absolutely. So we'll start even earlier to say we might bring a piece of land to you, Mr. Developer, because we think this piece of land is for sale, and it could be the location is good. So we'll convince you on the location. We'll do the studies around the market studies around it to give you a feasibility to create a business plan for you. So we can start as early as that. Now it depends on the maturity of the developer and where they are in their particular cycle. But we can start with you with a pen and paper, and continue to work with you once it's delivered in the whole value chain that I explained, maintaining the building for the long run, and then helping you exit as well at some stage, right?
So you mentioned you worked in Singapore. I've lived in Singapore for many years, and if you look at the story of the Asian tigers, they built their economies on real estate boom, and then of course they were the bust.
Yeah.
Do you see something similar that is happening or has happened in India with a huge boom and now a slowdown?
Yeah, so it's interesting you mentioned about Asian tiger, and we're all aware of the tiger economies and how they collapsed. And interestingly, I lived through that because I was in Indonesia, living in Indonesia at the time. in '97 when the collapse happened. And I think there's a fundamental difference between the two. I mean, there's probably some similarities, but fundamental difference really was those economies were way too over leveraged, and there's a combination of over leverage, combination of corruption, and flight of capital because it is fully convertible currency. So as soon as the markets got spooked, the money went out, and the economies, some of those economies still haven't recovered to their potential what they were in 1997.
Yeah.
I think the India story is perhaps slightly different because I think fundamentally the demand is still pretty strong and the country is getting wealthier from a GDP growth perspective, and that's real growth as opposed to an over leveraged consumer-led growth, right? So that's really on one side. So demand's pretty strong on the consumer side, in balance, right? So you'll have 1 or 2 years which is kind of bad, etc. And then on the other side, because of the talent pool that's available in India, which I think was a big difference between Asian economies at that time or tiger economies at that time in India, the talent pool that's available in India is very suitable to what the global corporates are looking for, right? So, for example, the commercial office is really built on back of outsourcing business, right? And the outsourcing business itself has evolved many folds over years. So the initial outsourcing was really call centers, right? Back in 2003, 4, 5. Then the simple processes. And that continued to evolve. And today, we're doing a lot more value-added work, artificial intelligence, cloud computing, data security, work in fintech, health tech, and so on and so forth, right? So, and that kind of itself demands skills and employment of its kind of own kind, right? So I think there's a fundamental support to the economy through the skill sets that are available in India, the companies who are willing to invest, the FDI is on the up, and the inflation is in control. So, your macroeconomic factors are broadly fine. Sure, we're going through a slowdown. And slowdown is not necessarily bad. It's always time which the companies should take to course correct and say, hey, now is my opportunity to cut a bit of flab and figure out and innovate and think how, and get ready for the next kind of. So I don't think slowdown is necessarily
you spoke about leveraging, and I was just thinking, I'm much older, but I remember when I first bought my house in Hyderabad when I used to work for ITC, and we were given loans to buy. Even then, the mindset of the Indian used to be that I will buy my house when I have most of the money. Sure. I will not take loans.
Yeah.
Today, everyone seems to be functioning on what I call an EMI generation.
Yeah.
How is that going to impact house purchase? I mean, everyone wants to buy a house.
Yeah. Clearly,
that's the cash flows.
As the markets mature, as the finances mature, and the financial markets mature, right, the products become available, right? So back in 90s, you could get leverage maybe 2x of your kind of annual salary. Then it became 3, 4x. It's probably 4, 5x right now, right? I think so therefore the ability to buy a house becomes better. I think the generation today and how the consumer markets behave today, they're much more amenable to take loans. So that's a definite factor. But I think more importantly than that, what's happening today is what I call Uberization of residential real estate. So as interesting, I was talking to a mortgage provider, and he said in 70s or 80s, average purchasing age of house, average age, which is buying houses were about 50. Kind of dropped all the way down to 30, 31, and now it's on the rise again. And it's on the rise because people are marrying late. So it's not about affordability, because the EMIs can create affordability, but people are marrying late, they're mobile, they don't know where they will be, and it just seems to be a big commitment to make, right? And in a market where houses are not doubling themselves in prices every 2 years, which they should not, but there's a period where that was really happening. So I think if you put all of that together, I think the propensity of buying house will remain low, even though the mortgage products are available and the EMIs are available, right? And that in itself is not necessarily a bad thing. I I think the industry has to figure out a way to meet the rental demand as opposed to a
Correct.
sale demand.
And yet the salary multiple
Yeah.
of an individual or a couple's salary to the purchase price of a house is significantly higher in our country as
Yeah.
compared to, say, the Western world or the Far East.
No, that may not be
May not be
the
true?
that
Okay.
that may not be true because post so up until the credit crisis of 2007, the GFC effectively, up until that time, in the UK, and I was living in the UK, you could get 5x to 6x of your annual income.
Yeah.
But the products were a lot more mature because you had 25-30 year payment period as opposed to 15 to 20 that's available here in India. The interest rates were a lot lower, so your affordability was much higher, and of course you could get away in those days with 100% loan to value,
Right.
or maybe even 110%
Right.
loan to value,
Right.
right? Which obviously ultimately led to the drop in that market. But even today, I think they have course corrected, and what's happened is perhaps you can get 70-80% loan to value, which India has always kind of stuck
Yeah.
to, and your sort of multiples have come down, but they're still better than India, primarily because they're lower interest rate environment and markets are mature enough to give longer loans. So that's really what's happening.
And yet, the converse, you spoke about Uberization of real estate. I was reading an article somewhere and saying the young people, the millennials, now don't want to buy real estate. They just want to rent.
Yeah.
Partly because they don't want to anchor down in one place with
Yeah.
property, and partly because the rental yield is never high enough.
Yeah.
What will that do to real estate?
So the good part is they're becoming more financial savvy from that calculation
True.
perspective. I still think that once people decide to settle down, it's nice to at least have one asset, because ultimately it's a long-term asset,
Yeah.
and it can't be weighed in terms of am I making 20% per annum return on that, etc. Because real estate in long term will never give you those kind of returns. But I think so. Therefore, I would certainly think that people should buy one asset at some stage. What that stage is depends on their own life. But I also think with the Uberization, we use that term again, the developers and the market has to change and create rental housing, right? I think fundamentally the market has not understood right now how to make money in rental housing, given the yields are so low, right? But if you look at the newer concepts, which is student housing or co-living, they're beginning to create. A lot of investment coming into India in that field, and there is a way that they are making money, right? And I think that needs to translate not just for co-living, but really translate it into massive rental housing projects, where you've got to bundle in services and figure out a different mechanism to make money in the long run, with possible exits for residential REITs at some point in time. So you got to look at it holistically rather than a traditional business model of, say, I make a plan, I sell it first, and because that model is not coming back.
Correct. That's true. In fact, interesting you're saying that now co-living is coming. But a few years ago, I was talking to someone in the co-working space, and I said, are you going to next come in with slightly fancier hostels for couples?
Yeah.
And he said, no, that can never happen. So,
And it's happening now, is it?
very interesting. Very interesting. Traditionally, in India and China, the grandmothers always used to say gold and land, which is also zar and zameen, should always be a part of our portfolio. Today, land and gold are not so attractive any longer. What are your thoughts on this?
See, I would agree very much to that traditional thought process, because I think allocation of your financial allocation in how you're investing becomes extremely important, right? And what happened back in 2005-06 was, because the real estate was giving such attractive return, people were over leveraging to some extent and putting all their money in real estate, right? Of course, some people made money, a lot of others burned their fingers. But every time in those days, the examples were always of success examples, right? And nobody wanted to talk about people who didn't make money, right? Come 2013, 14, 15, every event or party that one goes to, people talk about investing in startups, right? And people always point out to the two successful startups and how that guy invested in that startup and made 10x in 2 years or 3 years.
Yeah.
Nobody talks about the 98% of people
Who didn't make it.
any money or made a little bit of money, right? And I think that's something to be said there in terms of people wanting to just grow rich very quickly,
Sure.
which never happens, right? And we've grown up with those stories and we have plenty of examples, but it's hard to learn. So I think allocation, a proper allocation, portfolio allocation is very important. And I think in that, gold has a place. In that, real estate has a place. In that, markets have a place. Whether you're bold enough to go direct equity or mutual funds is your call. I think in that, startups have a place. So I think a balanced portfolio allocation is it's the age-old wisdom, isn't it?
Yes.
There's nothing new there.
That is true. So one more question on real estate before I move to some personal questions. And I'm not sure if you can, given your current position, you can answer it. But, property prices are soft these days.
Yeah.
We have thousands and thousands of young people who watch the show.
Yeah.
Is this a good time to buy?
Yeah, if there has to be a buying decision, it's a great time to buy, right? But I think what one must look for is, and I advise this, it's a funny advice, but trust me, I've seen people going wrong in this. Just Google and figure out the health of the developer.
Okay.
Number one. And all that information is out there. It's
Yes.
public information. That's number one. And you'll be amazed how many people don't Google and they're still relying on 10-year-old brand image, right? So that's number one. Number two, I think the advice would be to buy something which you're seeing immense activity on. So pay a little bit more, buy late stage construction. Of course, if it's complete, buy completed. So yes, as I said, I think in your portfolio, real estate is a must. Don't expect 10-12% return on it. You won't get it. Probably real estate is meant as a good inflation hedge. Use it like that.
True.
Third, it gives you stability in your own life to say, at least I've got a chat to live in, roti kapda makan, the old Indian
True.
adage.
True.
And fourth, yes, it's a great time right now because 2012 was the last high in terms of prices. The prices remained flat for 3 or 4 years, then they went backward for the next 3 or 4 years. So you probably today are able to get a unit at maybe 15-20% discount to the 2012 prices, which is great. There's I'm not a soothsayer. I can't tell you that in 2 years' time the market will start improving, or 1 year time market will start improving. But market will improve at some stage, right? So as long as you're happy with a long-term growth of 7-8%, which any real estate will give you over a 15-20 year period, which is the most that you should expect from real estate, I think you should just go for it.
Amazing. Fantastic. So Anshul, just moving to a few questions about you. What are the 3 adjectives that would describe you?
That I think is a very difficult question.
Okay.
But I think I'm. So one thing is I've got this ability to remain calm, and even when I get flustered, I do get back into my composure pretty quick. So I think maybe calmness, and I think the other is I'd say a bit of a bull as well, because I've got strength in the head, conviction if I know what I need to do, and I think really those two in my mind. Really, it's kind of difficult to talk about yourself.
Okay.
3 things that I do.
Okay. So then let me ask you something different. When was the last time you did something for the first time?
Yes. So interestingly, and I don't know how long will I continue it. It's hard work, I tell you. But just about a month ago, I said I've always had this thing of learning a music instrument. So I was just kind of thinking, what should I really learn? And generally, my hand-eye coordination is pretty good because I've played a lot of racket sports. So I said maybe drums is something that I can try. So just about a month ago, I've kind of started learning drums. I've had a couple of classes. I don't know how long will I continue with. It's hard work. It's
is.
it's too much coordination just with the
Yeah.
three things that I'm kind of coordinating with. But yeah, it gives you a new height. Just something challenging.
Yes.
It's nice.
Very interesting.
Yeah.
So my next question is the question I ask every single guest. Because a lot of people who hear us just assume that if you're a successful person, you don't have failures.
Yeah.
So my question to you is, what are your learnings from some of your failures?
So as an individual, what I have learned over years, I mean, obviously there'll be failures, right? I mean, when you're in school, you don't get into your coveted program. The MBA school you want, sometimes you don't get it. You get it next year, whatever it may be, the job that you want. But the thing is that you can't. In my mind, what I've learned over time is that as long as you're focused on the next thing, right? So of course, if you failed, there's some learnings which come out of it. Maybe you didn't write the right essay. Maybe you had the wrong answer in the interview. In my mind, you can't control 100% of that. However much you prepare, of course, preparation is important. However much, I think the most important thing is to figure out what's next, and just try and learn, draw a line, and just move forward. And I think that's something which I implement almost on a day-to-day basis. So whether you call it learnings, whether you call it a success mantra, I mean, that I think I just live by that. Just look for the next thing and just keep moving forward.
Do you have any regrets?
Aspirationally, I wanted to have a career in sports.
Okay.
Perhaps playing tennis. And I think I was very good at playing tennis when I was in school. But somewhere I just lost that. And in retrospect, I don't know. It's hard work, right, to be a sports person and professional sports person, and the chances of your success is very low. But if you ask me, I mean, would I have wanted that? Yeah, absolutely. Was I that good? Probably not.
Also, I guess at certain stage of life, certainly for Indians who were coming out 15, 20 years ago, the environment was very different. And therefore, the first thing most parents taught them was get a degree, start working.
Naukri.
Today's young people are very different. So, my last question to you, and this is, we've had a lot of very senior CEOs like yourself, and a lot of young people aspirationally want to sit in the corner office like all of you do. What would your advice be to a young individual starting off in the corporate world and looking at the next 25, 30 years?
Yeah. So I think the first few years is really about adding a lot of depth to your personality career. And I'd call it technical skills. I don't necessarily mean screwdrivers and wrenches, but it's technical skills in whichever area that you are in, right? So I think there's a lot of hard work, which is obvious, but it's a lot of depth that needs to be added, right? Because that really makes you who you are in the long run, an expert in the industry. And as we are kind of moving into how the world economy is moving, I think that expertise also helps frees up a lot of time in terms of, or gives you a lot of flexibility, right? You can move around the world. Sure. As long as you've got that experience, you can take that experience with you and go anywhere. And second thing I always say to people at Cushman and Wakefield, and other people as well who ask for advice, I think you should be very honest towards your career, very honest, and work for yourself. Be honest. Obviously, you're working for a company, but work for your career. If you're working for your career, I think the company that you're working for will benefit out of it in any case, right? And always see what you're learning, and once your learning stops, and once your career progression stops, maybe look for another opportunity. So I think those are 2 or 3 things that I often advise.
Interesting. Anshul, thank you very much. I'm sure the real estate business will continue to prosper under your able hand, but one of these I'm going to look forward to hear you drumming.
Absolutely. It's my pleasure to be here. Let's see if I can get to that stage where I can handle 5 or 6 instruments, but I'd certainly want to do that.
Thank you. Thank you again.
All right.
Thank you for listening to the Brand Called You podcast. Be sure to visit tbcy.in to join the conversation, access show notes, and discover fantastic bonus content. You can follow us on YouTube, Twitter, Facebook, and Instagram. Simply search for The Brand Called You. Thank you and see you next week.